Hello, everyone. Well, while there was some data out yesterday, jobless claims were better than expected. Service sector ISM was worse than expected. Of course, the U.S. government shutdown continues to dominate the FX market. On the one hand, there was some hope from a meeting of House Republicans with Speaker Boehner, who reportedly assured his colleagues that he was determined to prevent a default, even if it meant relying on Democrats to pass the measure to raise the debt ceiling. On the other hand, well, it's just too depressing to talk about the other hand. I like the comment yesterday by Dallas Fed President Fisher, who said, "We have a Three Stooges Act taking place on Capitol Hill." It wasn't a market-affecting comment, but at least it's honest. Now, regardless of what Mr. Boehner says in private, some participants reportedly believe that their leverage will increase the closer they get to the debt ceiling. So I think this act could drag on for a couple more weeks. That's likely to continue to drag the dollar down and boost the Swiss franc, the yen, and the euro. It was noticeable that although the problems in the U.S. dominate the market and the safe haven currencies, Swiss franc and yen, benefited accordingly, the growth-sensitive currencies, such as the Australian dollar and the stocky, rose too. Perhaps they're being boosted by the rapid fall in interest rate expectations in the U.S. Now, if this farce ends sooner rather than later, the impact on U.S. growth should be minor, while the impact on U.S. interest rates and rate expectations should be greater and longer lasting. That depends on this ending soon, however. I think these currencies, these growth currencies, the high beta currencies, may continue to benefit next week, but if it drags on past that and we start to approach the October 17th debt ceiling limit, they're likely to fall back rapidly as the global growth picture fades into a financial Armageddon scenario. Now, in the absence of any U.S. data releases, the market's again likely to focus on the Fed speakers, especially New York Fed President Dudley. Dallas Fed President Fisher speaks again today, as does Fed Governor Stein, Richmond Fed President Lacker, and Minneapolis Fed President Kocher-Lakota. During the European day, we start with the German PPI. The market doesn't expect any change. Later in the day, the Eurostat will release the Eurozone PPI for August. Of course, the PPI isn't a major market-affecting indicator, so I think we're likely to just trade in a narrow range until the U.S. Opens up again and we hear more information on the debate. For more information, please read the full comment on our website, www.ironfx.com. You can also follow us on Twitter and like us on Facebook. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.